Why Bitcoin is not pumping? Why is the stock market not pumping? Let's find out. So, diving into the DXY, Merry Christmas to those who celebrated yesterday. Diving into the DXY, we noticed that the last 3 months, October, November, December, have been really strong months for the dollar. We had a little reversal candle here, strong move up. The second month closed up higher than the wick of the previous month, which suggests further strength. We could tell that the RSI has been increasing, but it hasn't been reaching a very high moment like we note over here, where in the 80s it fell down. So, like I've been suggesting in my previous videos, I think we will see a potential double top. So the potential double top here is another 6%. Another 6%. Why do I think that this will happen? Well, you are about to close. We have a few days for December to close, all right? We have closed among the highest, we're actually on the highest point we've ever been, okay, since August 2022, when we were in an environment of strong high rate hikes, okay, where at least there was a discussion of increasing to squash inflation 2%. 2%, I mean, inflation was nowhere near that number. Inflation was much higher then, especially coming towards the end of 22 with the whole COVID saga experiment. Excuse me. So we have here quite a long way to go, and I do think we will reach that, especially if the December month closes higher than the previous month. We have no resistance here. We might find minor resistance to the 108, 109, but I do think that we should be able to see a double top, and perhaps from there on a collapse down to the levels that I think we will reach. So until this happens, I do not see an environment where Bitcoin will rally or the stocks. So we might expect a little bit of a pain until February, March. It's possible. Do I like that? I don't like that. But hey, we must not complain with the cards we've been dealt with. So this is what the Fed follows, okay? The 2 year, but most importantly, we need to look at the 2 year, guys. Look at the 2 year. The 2 year is on a huge rally. Look at that. Look at that. Guys, this is interest rate environment. This is a strong interest rate environment still. Look at that. Okay, the bond market is signaling to you that we are not in a risk-off environment any longer. Okay? I don't think that this is going to change until we see a double top here. And quite frankly, if we have this double top and then come back down, we're not going to come back lower than 3 to 2.5%. I think that we are entering an environment where governments are dumping each other's debt, especially with proxy wars, especially with all this turmoil. And I do think that a lot of this debt will be financed back into crypto and Bitcoin. Stable coins are backing the government debt, but I do not see an environment where the TLT continues the trajectory. Okay? Like, look at this bloodbath since February, March of 2020. Guys, look at this. I don't see, and here's a very classic pattern of like head and shoulders, and you can see that there's a bit of a measured move if you take it to the neckline. Neckline is somewhat here, Yeah, this suggested that we should be in this area. I do think we still have more pain to go. Yes, we may find, yeah, we might be shaping up something like this potentially, where we get a bounce and we get stuck in this range. But this is a bearish flagging. Okay, so this suggests that we are going to see higher interest rates. This is the long term, this is the 20 plus, but I'm telling you, this is a very bullish chart. I don't see an environment where right now Bitcoin can rally excessively. You know what? We may even see a topping of Bitcoin. I said it. I said it. I don't want to think it's true, but look, 108 could have been the top. I do not like, as a trader, I do not like this candle one bit, guys. This candle is a topping candle for this month. A topping candle with 5 days to go. That means that in order to reverse this topping candle, you have to have an increase of at least 6% to negate this, to say this is void and this is negated. So you're telling me that Bitcoin is going to rally at 6% in the next 5 days. Is it possible? It's possible. What are the odds? I think at this point you're 50-50, if not 60-40, of the likelihood of not happening. So guys, we have, I don't know if anybody's telling you this, we have a few more days. If you don't negate this topping tail, okay, let me clear this up. We have to close at least this candle here has to be a candle that looks either like this candle of September, okay, which would be a deal, or October. A candle like this is acceptable. A candle like this, still, when you see the topping wick, the body of this wick being bigger than the body of the candle, okay, it suggests that there's higher selling pressure than buying pressure. This is acceptable. Yes, it may be red. It's acceptable. Now, if Bitcoin rallies and closes over 101K, then yes, I'll tell you, you know what? The likelihood of shooting up back to 120, back to 108, 13, 20, maybe 40 is very likely. Okay, the market moves in symmetry, and that is why Fibonacci extensions work. That is why measured moves work. Okay, like look at this, for instance. This moved here, okay, suggested the highest point until the further consolidation. And look, you add this here, boom, symmetrical moves. Okay, so this is a very dangerous candle. Okay, if we look at Mara, I'm still bullish on Mara. You might ask why. I do think that this huge consolidation period is going to lead much higher. Okay, a lot of miners tend to lag. So in this situation, Bitcoin may have topped. Let's assume it has topped. Mara might have bigger moves to make, because don't forget that miners are profiting. Even though Bitcoin may have topped, Bitcoin is very profitable above 72K for most miners. Okay, tremendous fees. Okay, so these miners are getting paid. Let's look at MicroStrategy. Hey, MicroStrategy. This might be a possible pause here until we go further. I don't know. It's a hard one to read. Okay, it's a hard one to read, but these levels could be the next targets for the upside. For the downside, I would be buying I would be buying in the low 300s. Low 300s. 166. 240. I think if you wanted to DC, if this was heading down, I would start buying here all the way down here. Slowly. Slowly. Divide the money you have to add into this with by 6 or 5 and start adding here. Because I do think that before we see a move up, you'll probably have a move further down here until the selling pressure subsides. We are somewhat in the higher zones of RSI, high volume of selling. Look, this is a no-brainer. I do think that MicroStrategy has much higher targets, but it might be resting here. We might see some volatility. And this is what I wanted to aim at here, these zones. But overall, even though liquidity is somewhat rising over the last few months, I mean, we still haven't seen the print of November. We should see it in the next week or so. Money supply doesn't always suggest that we're going to see this liquidity straight into stocks. Okay, it takes a while. It takes a while. Commercial banks, I don't know how commercial banks feel about lending at this rate because it's risky. It's risky. Unless you have insane profit making machines, I don't see an environment where commercial banks want to lend with this interest rate. Okay? Like, if you look at these interest rates, over here, I thought that, hey, you know what? This is probably, last month, I was thinking this is probably a lower low. We are probably moving down. This W pattern is quite bullish, and the close above here, like if we look at the 10-year, we haven't closed in this middle ground. So when you look at a W pattern, the middle prices can predict or give you an indication, okay, of the move. If we close above the center point of the W here, it's almost guaranteed you're going to do a double top. 30-year. 30 years almost closing. It's a little bit higher. Can you see this? Okay. If it closes above this wick, or even here, which is fine, the next month may very well take us back to 5.2. The 2-year is ways away. You can see that this formation hasn't played out yet, but it's moving fast. It's moving fast, and if in the next few days we see interest rates rising, if we see December close in a very, very positive way for interest rates, then risk off is the play here, okay? Look at the DXY. The DXY has another 5-6% to meet the 114. Okay, I do think that in this situation, this is somewhat almost giving us an idea that interest rates will increase. Okay. Now, we looked at the DXY. We looked at the interest rates. Please subscribe, like, comment here. I don't like this. I think everything is showing us right now that we're going for lower. Be it a bottoming process, I don't know. Be it that we're just, this is the end of the bull market, I don't know. There are a lot of fundamentals that can indicate us that we should be expecting a solid 2025 stock market run in terms of a lot of the news out there. But again, the markets are a discounting mechanism. They price in the present and the future. So Be careful of anybody who's giving you high conviction when it comes to the market. Let's look at the VIX. The VIX spiked today. Look at the spike. Okay. Sure, it didn't hold. Okay, it didn't hold. But that this shows you that the volatility has begun. I do think that we will see extreme volatility going further, and this is going to be a trader's market. Absolutely. Let's look at the Russell because that's what Mara looks at. I told you guys I saw a double top. Okay, this is a double top. Now, whether this double top retests back to the move here and goes higher, it's possible. But the likelihood of the Russell, why do you think the Russell sold off? Look, what do you think the Russell sold off 10% over here? Okay? Why do you think it sold off 10%? Let's find out. Well, look at this. It's because the interest rates jumped. How much did the interest rate jump? Oh, 12%. I wonder why the Russell dropped. Could it be because of the interest rates? The Russell is the most interest rate sensitive market. The index here of the 2000 Russell includes small caps. Okay? Small, medium sized businesses. Okay? In this situation, small businesses cannot afford to take money from the bank with a 5, 8, 10% handle. Okay? They cannot afford that interest rate because that must indicate that the economy will yield back an additional 5, 10% to them. Okay, in profits, at least. We're not in an environment where spending is going higher and higher. We're seeing unemployment increasing. We're seeing global instability. Okay, all of these things could be bullish for particular stocks, for particular sectors, but not for the broad Russell. Now, an argument against it could be, look, yes, we double topped, okay, on the monthly. We're still closing within this green candle. Okay. So for the bulls out there, there's still hope. If you're closing within the green candle and you don't negate it, if we would have closed lower than the green candle, I would have told you, the next month is going to be even lower. I cannot say that by reading this candle alone. But the argument here for the bulls is that the Russell usually catches up and lags with the QQQ. Okay. Lags with the SPY. I can't find the SPY now. It's somewhere around here. There we go. Okay. It lags. So the WIM, the Russell, is over here. That's why I drew this to compare. That if we catch on to the Nasdaq after the double top and the dip that we're having over here, okay, then we might see that rally, that next 35% rally. I don't know, we might see let's see from here 35%. Hey, 35% might take us close to the 300. It's possible. Okay? But the timing of this is hard to predict. I do think that the next month or two will be turbulent because interest rates are shooting up. And this signals a fear and a lack of confidence towards the global authorities. Worldwide. Okay, the most pristine collateral in the world is the US Treasuries and gold now. As of late, it has moved into the number one tier of collaterals. So I do think that in this environment, until the interest rates drop, okay, you'd have to see a 20% drop, but to stay there, to close there, not just bounce afterwards, to actually stay in this minus 20% zone, to close below this consolidation in order to have a move lower. I do think that at some point we will see 2.53% interest rates. But in the very short term, this might go up to 5%. We may see 5% in all of these durations, short and long. If that happens, goodbye Bitcoin rally, goodbye stock rally, and expect only particular stocks. I do think Mara will move, but look again how Mara follows the IWM. Like, look at this. This is the exact same candle I showed you on the Russell. High increase, high move up, drop, majority of gains lost, but still closing within the green candle space. This is bullish for the next month, or at least it shows that the bulls are stronger than the bears. So let's see. Looking at commodities, yeah, there is a possibility. If we would have closed above this, I would have said we would move to the 4.4. A lot of resistance here, even here. 4.4.5. I don't see how natural gas can beat those levels. It could be drawn as a magnet, but this candle over here suggests that there might be a move down to negate it. Who knows? If it comes down to here, I would this is why I said buy here natural gas, okay? If it comes down to this box here, if it comes down to this trend line on the monthly, you're buying. You want to buy natural gas. And I think energy is the place to be after Trump. That's all I got for you guys. Please like, subscribe, comment, support the video. Happy holidays, Merry Christmas, Happy New Year. Thank you.